Danny Phillips from CU South. I'm here today with Dan Daggett and Emily Jorgensen from Credit Unions First, talking about a great product that they have to offer to our client credit unions. Excited to be here. Introduce Dan. Dan's been a great partner of ours. Worked together on a handful of different great products that they have available to the credit union space to help your members and make for a better overall experience, not just for your members, but also for credit unions. Dan's been in the industry for a little while now.
You could say that.
um, Without further ado, Dan Daggett.
Great. Appreciate that, Danny, and we really appreciate the partnership we have with CU South and the ability to help serve your credit unions and their members. I also want to mention John Jorgensen. He's one of the co-founders. He's with us today, and he's going to chime in on a few of the slides as we go through them. And we don't want this to be death by PowerPoint, but we're going to just jump right in. And today we're talking about reclaiming the vehicle service contract. And vehicle service contract plans have been in existence for, well, since well before the 70s with automobile dealers, and they figured out that these plans are gold. They've been known to squeeze a dime out of every nickel, and that's what they've done. It's your moment as credit unions to return those dollars back with a service contract. And John, do you want to maybe just make a comment about the next couple of bullets we have
Yeah,
there?
there's a two words there in small print here, Dan. It says think ownership. And that's a mindset change. So you're not a customer anymore, you're not a client, you're an owner. So I want you to think this is your plan.
Absolutely. Thank you, sir. So what are we going to cover today? We're going to talk about what the problem is, where service contract profits are going, and why it should matter to your lending team. This is probably a good place for me to interject a little story. We ran a similar program here in the state of Maine, and when we implemented this program with our credit union, we were at maybe a 2 to 4% penetration with vehicle service contracts. And part of the reason that the sales volume was so low is because the loan officers didn't believe in the program. They didn't believe in the product. So when we made the change and we actually had the ownership opportunity for the credit union and the members, they immediately saw the benefit. And over the course of probably 18 to 24-month period of time, it took some transition time for folks to buy in, but we went from 2 to 4% to 20 to 25% product penetration, and it made a significant difference into the credit union and to the members. So what's the opportunity? We're going to talk about the money we're leaving on the table. And the solution, as John alluded to, is credit union ownership. Ownership of the program is a game changer. And next, we're going to talk a little bit about Total Warranty Services. They're the folks that administer our program for us. And we're recording this webinar. So when this is over, Emily can share this out with anybody that would like to see it. But we're also going to include two links, one of which is the link to Total Warranty Services. So if you want to get into the weeds and look at what the training looks like and look at what the plans look like, you can do that. We're not going to do it today just for time's sake, but we want to give you that resource. Fifth, we're going to share with you the member experience. It's a total game changer, and this is a proven model. Dealers have been doing this for a long time. Melanie and I, we created a program years back, and we've made this one better, and we'll show you how we've made it better in a few slides down the road. John, would you like to add anything?
The only thing I can say, Danny, for a car dealer, the greatest financial vehicle they have in the entire organization is their vehicle service contract. That's where they make a lot of money. And you're going to see, as Dan goes through it, you're going to see the opportunities and the potential your credit unions will have.
Exactly. Thank you. So the problem, in most cases, credit unions do not see the profit. Traditional service contract programs funnel underwriting gains to a third-party vendor, and the credit unions usually mark up their service contract $200, $300, $400, but the real money stays with the administrator. And the member claims and cancellations are controlled by that third party, not your institution. And by having ownership of the program, that now shifts to you, so you have some control and say in that process. In traditional programs, there's little transparency in how claims are handled and how those profits are generated. Those third parties have uh, they have a personal reason to deny claims, and that is they can make additional profit. So this is a game changer. So currently, who gets the profit with the third party? They get the underwriting profit. Reserve income goes to the third party, and credit unions, they only get the markup. Um, so this is a game changer from a revenue standpoint, and we'll look at those specifics in the next slide. Thank you, Em. So how much money are credit unions leaving on the table? Here's the opportunity, and we're using this as an example. The average premium's $2,500. What goes to sales, how much stays on the books. As an industry, we're leaving roughly $381 million in underwriting profit on the table. And this is based on a 5% penetration. So if you can imagine your institution being able to go from a 5 to 20 or 25% penetration level, look at the money we're leaving on the table. Um, the other challenge that folks have is we're currently sending monies away to a third party. With our program and ownership, the credit union gets to keep those premiums on their own books. And that's a big one. You want to talk about transparency? It's significant. Again, at 5% penetration, we're leaving 762 million in deposits on the table. When we talk about liquidity issues, that's not a significant game changer, but it certainly moves us in the right direction. And the credit union can invest those dollars in several ways, whether they're lending them out or putting them in their overnight account with corporate. Those are dollars we're leaving on the books. And for CU South, with your credit unions, Danny, again, at 5% penetration, we're leaving a little over $2 million in revenue on the books on an annual basis. Uh, so why not bring that in-house and get credit unions to be able to take advantage of that?
Say, Dan, question for you. So 2.35 million, what would be the deposits? Relief there, that would also,
John, off the top of my head, I don't know that. I could probably figure that calculation out if anyone had that question.
Yep.
But that's not a note that I took specifically for CU South's credit unions. But I appreciate you asking the question.
Sure.
So what's the solution to that problem? It's you owning your own service contract. You get to control the premium funds. You keep them on your books and again, earn investment income while they're held. You retain 100% of the underwriting profit. And I know I'm reiterating myself a little bit, but we're really trying to drive home the importance of these significant uh, diversification opportunities that we bring to the table compared to other folks in the industry. And then you get to take those dollars and reinvest them in the member value. Where can you redirect those earnings, whether it's better rates, better services, maybe there's a not-for-profit in your community that you can give some of these funds to. It's totally up to you. But at least you're in control of your future with those dollars. So the member experience, John, do you want to maybe take this one and go through some of these
Be happy
protection
to,
plans?
thank you. So, Total Warranty Services has a very complete plan. If you see on the left-hand side, it says exclusionary plan. That's actually about 90% or more what's offered to members because it includes almost everything. There's just a exclusion section that says we do not cover these items, and those items are not covered, such as brakes, general general maintenance items. They don't cover. They just don't cover certain very small list of things. But if it's not on that list, it is covered, and the officers that provide this coverage have great experiences with their members. And the second option is stated components. That says basically there's like three different plans, and what's stated is covered. If something breaks and it's not in the stated components, it's not covered. So it has to be named. So like a powertrain plan just covers the engine, transmission, those type of items, but doesn't cover electrical or computers, things like that. The exclusionary plan does. There's a powertrain wrap. So if one of your members buys a Kia or a Hyundai, it comes with a 10-year powertrain coverage. Okay, well, you don't need to duplicate coverages, so they have what's called a wrap, and it wraps that powertrain and covers everything else. So that reduces the cost to the member. As you are getting more involved with commercial clients, if they have a truck they're buying and they're going to use it in their company, you can sell a service contract on a vehicle that's used for commercial services. If a customer is buying it in his company's name, is not using it for commercial services, he wouldn't have to pay that additional charge. And last but not least, the purchase price refund. What that basically means, and you'll have customers or members say, you know what, I bought these plans in the past and they don't pay. They never pay. So what this says here, if they don't have a claim, let's say they buy a 5-year plan, at the end of 5 years, there's been no claim, they can file for a refund up to $2,500. And there's I believe it's a $50 charge for processing this, and it covers you up to $2,500. So and that asterisk means there's only one state that does not allow that, and it's the state of Florida. But all the other states allow this plan to be involved. The portal for submitting claims. This is a really important part, Danny. Daniel, is in times in the past, and people had to call in to get the claims worked on and so on. Well, they changed that where it could be done digitally. They go online, file the claim, take pictures of what happened, and they make decisions very, very quickly. The worst thing can happen is if you you drop off your car, and they tell you come back tomorrow, and you see the car on a lot, and you go in and say, I'm ready to pick up my car. Well, your car's not ready yet. Says, well, why? Says, I can't get a hold of your vehicle service contract company because they use the phone system. And if they may be on the line for 15 minutes and they'll hang up because they need to turn wrenches. And that's the worst feeling people will have. We want to get the claims taken care of quickly. It's streamlined. It's kind of like Danny, you're going somewhere with your family coming up, and you're taking pictures of your kids, and you can immediately send those pictures right away. Unlike years ago, you take pictures, then you got to take it to a place that processes the pictures, and then you send it out in the mail. That's exactly what this is like. This is a streamlined claim process, which it moves everything faster, and the members will really appreciate this. The other things, there's really no waiting, and they use a corporate credit card to pay all claims, regardless of where they're at in the country.
Yeah, that's great. And I just want to know, when we're talking about the protection plans that are available, as a credit union, because you have ownership interest in this, it's kind of like a la carte. You can just choose an exclusionary plan, or you can choose an exclusionary plan in commercial service contracts. The choices are up to you, but we at least want to let folks know that, that there are multiple options that we can put a program together for you on. And again, it's a proven business model. Like we said at the beginning, auto dealers figured out that there's gold in these service contract plans. We've got 50 years of actuarial data and management. We manage these to a 50% loss ratio. It might be that your credit union says, no, we want to manage it to a 60% loss ratio. It's your program. You get to manage it, but we have the software and the Navigator platform in place for you to be able to do that with. And the other nice thing is we hope to ensure 100% of your members, we offer these products to every member. It's simple and easy, and the member feels empowered and not pressured. And it's not a sale. It's sharing the good news with your member. And so this slide, we included this. We've already covered most of these pieces, but we thought it might be prudent for a credit union that might want to share this with your staff, or you might want to share it with your board members to do a little quick side by side with a traditional service contract as compared to a credit union owned contract. The underwriting profit, which is the big one, third party now keeps it. You're going to keep 100%. The premium deposits, it's going to go on the vendor's balance sheet. Now they're going to stay on your balance sheet. The claims experience, they go to an outside administrator. We have total warranty services as our administrator, but part of that claims experience is going to be based on the fact that you're controlling those dollars. It's your institution. And transparency, it's limited visibility. With us, it's full visibility. You can set up an account with your vehicle service contract in home banking and look at it on your phone. You can't get much more transparency than that. And the investment income, you currently don't have any opportunity because you don't hold the dollars. Now you hold 100% of them, and you can earn every dollar you can on those premiums. And lastly, it says member trust. I probably should have changed that to say member trust, but also loan officer trust. Uh, it's eroded by third-party delays, as John spoke to a little bit earlier, and the fact that they have a vested interest in denying claims. Now it strengthens that control. We only have a few more slides to cover here. Um, there's some questions worth asking right now. John, do you mind walking folks through these? I know there are a couple in here that you're passionate about.
Sure. Yeah, these are great questions for you to evaluate what you presently have, and it's important that you know what you have. That's the bottom line, and what it does for you, and what are the benefits to you are not only to you but to your members. Number 4 says, are there additional fees you may not be aware of? I've been working with service contract companies since 1979. And so I've seen all kinds of fees and so on. And we can provide you, Daniel, a list of these fees that you can look through. But it's just like any other industry, hotels, rental car companies, they'll fee you to death on all kinds of things. And so you got to look for those. They're kind of hidden. One example is roadside assistance. That's generally not handled by your service contract company. That's an actual third party within another third party. And that roadside assistance company charges your third party administrator for their services. So when we have that coverage, but we include it in our cost. But many people out there companies will say, well, here's our cost. It's the same as what you're paying. And they say, well, what's this fee for? Well, that's a roadside assistance. And that's an additional whatever it is. So it's just more money that's out of pocket. And one other thing that I'll mention that if you are on what's called a retrospective plan, a lot of them have what's called a loss ratio threshold of, say, 70% or 80%. So if you're at 70%, that's your threshold. If you have a loss ratio of 71% or more, you do not participate in underwriting profits. You're closed out. So we don't have it. You have 100% of the opportunity.
Exactly. Thank you. Appreciate that. So what's the next step? Let's make credit unions first, and that's intentionally a pun on our name. We want to make your credit union first, and there are a couple of easy steps. Reach out to Danny Phillips over at CU South, or you can reach out to us on LinkedIn or email, schedule a discovery call, and then we're going to launch a program in Earn. And I should also note, We have a calculator on our website, and Emily will include that in any emails that we send out, or Danny can, where you can go in and easily just put in your asset size and the number of service contracts you're currently selling. It'll show how much money you're leaving on the table in underwriting profit, and we convert that into what that means in terms of return on assets, and also show you the deposits. But it's a really easy slide calculator that you can say, all right, we're at 5%. What if we were to move that needle to 20%? What would it mean to your credit union from a profit center and from a deposit center? And I encourage all of you to go out and check that out because the numbers are significant. And the last slide, John,
Yes,
comes over to you.
thank you. Everybody knows what an iceberg is. It's a great visual. And when we see an iceberg, if we're on the ocean, we see an iceberg, always see what's above the sea level. And that's what most credit unions have today. They have a plan that they do not participate in anything below the water level. And I mentioned to you earlier that this is the dealer's greatest financial vehicle because they get to participate in the whole iceberg, not just the top. So that's what this image is designed to share, is that we want CU South and your members to participate in the total iceberg, not just what you see at the top.
Yeah, great analogy. Well, I really want to say thank you. And Mr. Phillips, I'll turn it over to you to close this out from CU South.
You're muted.
I appreciate everything you guys have shown here today. A lot of great information. I think if a credit union in the future is watching this recording and has questions, we got plenty of resources here to reach out to. There's a reason why these vehicle service contracts are being sold by dealers and other third parties, and you've kind of kept in the background, and you don't know much about what happens after your member files a claim, unless the member tells you. It's 'cause somebody's making a lot of money off of it, and it's not you, and it's probably not good for your member in that situation either. So definitely reach out if you have questions. Contact information will be provided as well. And I appreciate you guys' time today showing us this product and bringing some awareness to the credit unions about things that are available out there in the market that they don't hear about.
Thanks, Danny.